You're listening to Smart Metals Radio from the Hard Assets Alliance.
Hello and welcome to the show with me, Andy Duncan, in London. Today, coming to us from New York City, my special guest is Jay Taylor, the publisher of Jay Taylor's Gold and Technology Stocks newsletter and the radio host of Turning Hard Times into Good Times. On today's show, we'll be discussing gold price manipulation, how China and silver might be linked, and alternative investments to gold. Hello, Jay.
Well, hello. It's good to be with you.
Fantastic. Now, there are two schools of thought in the gold market. Either the price is manipulated by central authorities or the gold market is just a highly volatile place to be. You appear to be squarely in the first school of price manipulation. Why is that?
Well, in part, I would say that if gold isn't manipulated, it'd be about the only market that isn't these days. To start with, we have something called fiat money, which is a grand manipulation of virtually all the transactions that take place on Earth. We no longer have the market's choice of money. So the medium of exchange skews and creates everything, I think distorts all manner of market decisions. So for example, if you can have the ability like a mafia don to create money out of nothing and then use that money as a claim against the real assets in an economy, well, that isn't exactly free market economics, and that I believe, especially since Nixon took us off the gold, closed the gold window in 1971, that has really paved the way for those in charge of the fiat currency system, and I'm talking about the central banks as well as governments that regulate them or allow them the freedom to operate. That has given those folks the ability to redistribute wealth from those who created it. I'd like to say the miners, the manufacturers, the inventors, and the farmers, to those that control the printing press. And that would be, the beneficiaries would be the large banks, which are being protected by the governments, and all manner of people who pay for the elections of our elected officials. So from that perspective, I think the markets are rigged. I think all of them are rigged. But more specifically with respect to gold and silver, let's talk about gold primarily because that's what I'm mostly focused on. I think what you have with this creation of fiat money, an ability of those same interests who are attached to the money creation process through the Federal Reserve, through the central banks of the world, they have an ability then to enter into paper contracts, to futures markets contracts, if you will, and options contracts endlessly. There's no need to really have to have anything to do with gold. So what I think we have is a virtual gold market in London and the United States that has nothing to do, or very little, if anything, to do with the actual physical exchange of metals. On the other hand, we have, I think, a growing desire for physical metals in China. India has always had, and I think Russia. I think mostly the countries that are considered to be rogue nations or adversaries to the Anglo-American Empire, those countries are really starting to set up the infrastructure for trading actual gold, real gold. So I think we have two gold markets. I think we have a true gold market, a bullion market that's taking shape in Asia, and we have what I would call a virtual market in London and New York, and the virtual market where you have 100 times more contracts traded in paper than in actual settlement in gold. So I think what this has allowed a small number of banks, bullion banks and trading firms to do is to hit the markets, smash down the price at various times. And after all, if you had the license to print endless amounts of money and redistribute wealth in your favor, you would want to continue doing that as long as possible. So the last thing that the people that enjoy that privilege would want would be for people to opt out of paper and go into gold. So I think there is a propaganda game that goes on, and I'm not saying it's necessarily, I wouldn't even call it necessarily a conspiracy. I think people just act in their own best interest as they see it, in their own selfish best interest, and that would include sometimes influencing lawmakers, buying off lawmakers to have laws passed that allow them to have an advantage over citizens as a whole, unsuspecting innocent people, again, the people I think that create the wealth, the miners, the manufacturers, the inventors, and the farmers, who are getting ripped off essentially, with wealth being redistributed to the people that have the benefit of it. And it's nothing new in history. I mean, you go back to the South Sea bubble and all of that. The Cantillon effect, I think, is what Alistair MacLeod has spoken about on my own radio show already. Alistair's talked about the realization that the people that are closest to the feeding trough are the ones that get the first dibs on the new money that's created. So I think that's what's going on. I sort of hesitate to call it manipulation. I think it's people that really act in their own best interest, not necessarily even conscious that they are doing anything wrong. I think they feel they're doing everything right because, after all, one needs to take care of himself first. But so yeah, I guess you could say, if you loosely define manipulation, that I would be in the first school of thought.
Now, if the price is being manipulated to keep kind of Keynesian economics going, do you think sooner or later the Western central banks are going to run out of other people's gold to keep suppressing the price? And if you do, when do you think this is going to happen?
Yeah, that's a very interesting question. I think very important question, because when it does happen, I think we could see a real realignment of the current global monetary system. I suppose it would happen when the shelves are empty and when people notice that the shelves are empty and are angry about the shelves being empty. When they demand a delivery of gold and it's no longer there, then I think things are going to, change. Now, when that happens is very hard to predict. When does confidence in the dollar decline? But I do think a lot of the geopolitical strife and issues of our time right now, especially the Ukrainian situation, may be part of a bigger picture of this sort of currency war that Jim Rickards has talked about, this whole notion of nations not necessarily pleased about the United States taking advantage of its ability to create money and use that money, create money out of thin air, and then use that money as a means of bidding away the world's resources. And in fact, I think it may not be coincidence that, in fact, as John Perkins has said in my own radio show in the past, he has noted that it seems to be the countries that are sort of opposed to the dollar monetary system as the world's reserve currency that are considered to be rogue nations, or nations that we decide are not friendly to us. Indeed, it seems to me that it was only after Yanukovych decided he didn't want to join the NATO forces and go in the direction of the West that the West wanted, that there was all manner of hell breaking loose in the Ukraine, fermented by NGOs, essentially, that overthrew the government, not unlike what we started to do in the 1950s with the Iranian government. So I think what wars are really about are about economics, and I think there are nations that say, I think what Putin is saying is enough already. You guys promised us that you wouldn't encroach on our former territories in the Soviet Union, and yet you have, especially under Clinton, you started aggressively annexing various countries into the NATO sphere. And I think once we pushed up against Russia's doorstep, but I think it has everything to do with this whole thing of grabbing the world's resources and being able to. It has something to do with sovereignty for sure, as well. But I think it has an awful lot to do with people trying to protect their own interests. And now, I believe that we've perhaps hit that point in time with Russia and China. India might be thrown in there. Countries that are saying, well, we would like to remain Indians or Chinese or Russians, and we don't really want the Anglo-American Empire coming in here and taking what we have away from us. And so I think that what we could see is a real change from what has been known as the petrodollar after Nixon took us off the gold standard, and we formed that, with our alliances with the Middle East and with Saudi Arabia. And I think now that it could very well be that we will see a move towards a petro gold currency regime, as China is making all the right moves in terms of importing huge amounts of gold, and by some accounts as much as being produced globally by the mines, and also by establishing oil markets. It seems to me that, especially if we continue to push Russia, that they will be forced to sort of join forces with China and maybe India, and set up a new banking regime, coalition, a trading arrangement that says we don't want dollars anymore. And it's not hard for me to envision the possibility that Russia could send China oil and get paid in renminbi, and then Russians could take the renminbi and buy gold with it, because the Chinese are setting up a gold exchange for foreigners as well now. So I don't know what's going to cause this thing to break down, but I do know that the Western world is broke. I do know that the United States is broke, really, truthfully. Even the Federal Reserve, according to Jim Rickards, is saying that some of the Federal Reserve officials privately acknowledge that if the Fed's balance sheet were marked to market, it would be underwater. So I think that we have lived under the Keynesian illusion that we can consume our way to prosperity rather than save and produce and invest our way to prosperity. And I think they, unfortunately, for those of us living in the West, we may start to have some very difficult times. Suppose the dollar is no longer accepted as the world's reserve currency. That might have a tremendous effect on our purchasing power here in the West.
What do you think then will happen to the price of gold? Let's say we use the current paper dollar value as a fixed value. Jim Rickards talks about $7,000, $9,000, possibly up to $50,000. Do you have a kind of dollar price for gold once it goes up to a kind of peak?
No, I don't, because I think that you can't. It's hard to figure out how worthless the dollar will become in the minds of people. As somebody has said recently, I think that we're on the PhD standard now rather than the gold standard. And so to the extent that people can be conned into trusting and accepting the dollar, then, gold might be restrained. But once it goes, and once people sort of figure that the emperor is wearing no clothes, then I think it could go to almost to a state of worthlessness. I mean, what is really intrinsically valuable of the dollar, other than the fact that people still believe it has values? And I can remember my son in grade school. I was astounded to learn that his sixth grade history teacher thought that the dollar still had the gold backing to it. So the fact that we have gone off the gold standard for a long time ago, it's still, people think of the dollar as something that is sacred. I mean, it's something that has some intrinsic value when in fact it doesn't. And I think that when the masses start to understand that, then I think it would be Katie bar the door, and we could see gold prices, Rickards numbers, who's to say 50,000 is outrageous? I mean, if you look at just the amount of money that's been created out of thin air over the last number of decades since 1971, those kind of numbers in the multiple thousands certainly are in line with that creation of money.
Okay, and what kind of percentage of physical gold do you think people should have in their investment portfolios?
That's a very interesting question, because I just finished interviewing Axel Merck, who is a fund manager of Swiss origin, but he lives here in the States now. And he did some modern portfolio theory calculations and came out with some numbers. I think the portfolio that had the S&P 500 and gold in it, just a simple portfolio of S&P 500 and gold, going back to 1934, I believe the optimum portfolio was 41% gold and the rest in S&P 500. I thought, well, that's just ridiculous. Who would ever suggest that? But applying Markowitz portfolio diversification or efficient or modern portfolio theory, using the correlation coefficients that are inherent with gold. We know gold runs opposite to the mainstream. Over a long period of time, it is negatively correlated, or at least not very positively correlated with the market. So that made a certain amount of sense. Now, of course, there are a lot of other different investments, real estate and other commodities, and a lot of other things that one needs to put in their portfolio. But I found that extremely interesting, that modern portfolio theory, using actual numbers, going back looking at the performance of gold and the S&P 500 since 1934, would call for that kind of heavy amount of gold. I would suggest something for most people should be 5 to 10% at least. And then I like a lot of gold stocks and things like that too. Personally, I have a lot higher allocation to gold and gold mining shares, probably too much, one could argue. But I feel so strongly that it's inevitable that we're going to see a demolition of the U.S. dollar. And whether that is 6 months from now or 6 years from now, I don't know. But I do know what value is. Gold has retained its value for centuries. It is real money. It has intrinsic value, and all fiat currencies have all gone to the home of their ancestors, and that is, underground.
That's the most interesting use of Markowitz modern portfolio theory I've ever heard of. I just want to move on to silver as well. Silver's more industrial rather than just a pure kind of money kind of precious metal. Could a possible kind of Keynesian collapse in China drop silver's price, or will its kind of link to gold bring it up too?
That's a very interesting question. I think silver is referred to as poor man's gold sometimes. To me, silver, though, has intrinsic value. It is the second best money created by nature, I think, that people should own. And it does have more industrial purposes, but it also acts as a monetary asset because of its attributes. And so, I suppose it could. And as a matter of fact, I think gold could in dollar terms, could really get hit hard as well. In the short term, I think that's absolutely true. We saw it happen during the Lehman Brothers. After Lehman Brothers, we saw gold and silver get hit extremely hard. And then as the economy rebounded, silver did better than gold. But since Lehman Brothers, I think gold has outperformed silver, mainly because I think there's doubts about the global monetary system. I think silver is a good thing to have for a number of reasons. One is it is more of an industrial metal, so and it is something, I think, when the masses start to get concerned about the dollar or their purchasing power, that silver is more affordable by more people. So I think you'd see more of a demand for silver as a monetary metal once that day arrives, and perhaps you'd see a much bigger increase percentage-wise in silver than you will in gold. But when it comes to central banks and the main powers that be, I think gold is probably the first thing that I want to own. But also just for the sake of having some barter currency around, if it comes to that, if you need it, silver is more practical than gold. We did a quarter of an ounce of gold to buy a quart of milk isn't going to work out too well. But if you have a silver dime or something, it might work out. So I think you need to own both. But with China, if China implodes, I mean, one of the big things that I see, one of the problems that I see with our global financial system, obviously, is too much debt. And so do we have a super, deflationary implosion, which I think is very possible, because after all, debt is the raw material from which fiat money is created. It's not just created out of thin air exactly, it's debt. And so what we've been doing is creating more and more debt faster and faster, which has made the Western world increasingly more insolvent with each quantitative easing. And so I think that we could very easily see a deflationary implosion that could send all assets down to much lower levels. In fact, I've had Robert Prechter on my radio show who's talked about he believes that's going to happen. He's absolutely sure, and he thinks the dollar will be better than gold. I don't buy that one. But one thing that Robert has said is that of all the commodities, all the hard assets, that gold will go down less than all the rest. So even he understands that gold is a monetary asset and probably the thing that you want to own. But I don't discount the possibility of silver getting whacked real hard and gold also. If we have another sort of a Lehman Brothers moment, or I think that could happen. I hope it doesn't, but I think it could.
And just briefly, a final question. Besides gold, silver, and gold stocks, is there anything else in the market at the moment that you think's good value?
Well, I think that people should start out by trading their increasingly worthless fiat money for tangible assets, starting with real estate and the home that you live in. I think that's what you need to start with. I suppose diversification, Doug Casey, who I have the highest regards for, understands that as well as anybody. And diversification geographically and hard assets. So maybe it's farmland, although I think farmland has gotten very expensive in the United States, so maybe that's not the best place. But certainly a place to live and tangible assets to start with. And probably some other commodities, although, you have to find a way to store them, right? And that's why you come back to gold and silver always as the most sort of efficient way to protect your wealth in times of stress.
And we can always go with the Mogambo Guru's a tiny bit of oil as well. Well, it's been great speaking with you today, Jay. How can our listeners best find your newsletter and radio show?
The best place to go to is Jay Taylor Media. That's Jay Taylor, Taylor, media.com. And from there, they can access my newsletter, Jay Taylor's Gold, Energy, and Tech Stocks, and my radio show.
Thank you very much for your time today, Jay Taylor.
Pleasure. Thank you for having me.
Subscribe to the Smart Metals Radio Show on iTunes. You can also visit us online at hardassets.com/radio, where you can subscribe to our free mailing list and receive our free Smart Metals newsletter. For anyone who wants to set up an account with the Hard Assets Alliance, as a special offer, we shall be waiving opening and setting up fees. Listeners who'd like to speak to a live rep to walk through the registration process can call 1-877-727-7387. That's 1-877-727-7387. I'd like to thank Jay Taylor for joining us on today's show, and I'd like to thank you for listening. Until next time, goodbye.